Hello and welcome to Talking Stocks. I'm Gugulethu Cele. Also in studio with me are our anchor capital guests, Peter Amitiage and Sean Aston. Now they are the experts and together they bring you insightful analysis into JSE and global listed companies. Today we're looking at JSE listed education group, Advtech. Gentlemen, welcome. Advtech is obviously the big competitor to Curro Holdings from a South African perspective when we think of education, but many people don't really understand the subunits to the schools group. Sean, maybe if you can enlighten us there.
I think the mix has changed quite significantly in recent years. I mean, you had a situation where their tertiary business came under significant pressure, which was effectively their Varsity College brands and Rosebank College brands, which are the key ones. They had a big problem with enrollments about 2 years ago, which resulted in profits coming down. And you now have a situation where the three key divisions, tertiary, schools and resourcing, which is effectively a staffing business. But really we see this as a play on the growth in their schools business going forward. It's already 60% of profit. The key brands there are Crawford Schools and Trinity House, and they're throwing significant capital investment behind that division in coming years. And then you've got resourcing at the far end, which is only 7% of profit. We don't think that's a growth business. It's almost irrelevant in the investment case.
I want to pick up on the acquisitions that you mentioned, because that is certainly something that we've seen in the news headlines and spoke to the CEO about recently. Peter, just to get your perspective on it, we did question him on the pricing regarding the new schools that they picked up. But from your perspective, is this a prime opportunity for the company to be bulking up and beefing up on its junior lower components?
Yeah, I think this company should be heavily criticized for, if you go back 5 to 7 years ago, they owned this market, they dominated it, and they had the opportunity to become the leader. And often what you see in businesses, Gugu, is if there's a CEO who's going to retire in the next 3 or 4 years, often they lose their bravery. And I think that's what happened with this business. I think in Frank Thompson's defense, who's now back at the helm, about 2 or 3 years before he retired, they reignited their growth ambitions. And they went out on a spree to both build schools and to buy schools. Now, schools are fantastic businesses. I'm a client of my current school for 18 years. My kid goes in at grade 000, and you've got annuity revenue. They can put the price up or whatever they want for 14 years, and I'm a customer of that. And they're getting great returns. So you can't buy good schooling businesses cheaply, and that's part of the value opportunity that they lost. If they had started up schools a while back, I think that'd be a much more valuable business. They let Curro kind of take that lead. But if you look at where it is now, the share price that you're paying, they've got very ambitious growth plans, and they've put a lot of capex and programs in place. What you're buying now, they've got it right. They're using some debt. They've put some new schools in place, and the prospects from now for the next few years, I think, look pretty exciting. But not just exciting, also with quite low risk. You know, it's all very well to have a business which can grow under certain conditions. The probability of Advtech growing at 15 to 25% for the next 3 years is extremely high, and we don't think you're having to pay too much for that.
Let's touch on that, especially looking at the numbers here, the company stats in particular. Share price sitting at around 9 Rand at the current PE, a lot lower than what its competitor Curro sits at, because everyone talks about the valuations regarding Curro. So you're obviously quite impressed with the stats.
I think Advtech. The valuation is about a forward 18 PE now, which doesn't sound that low, but compared to Curro, it's much lower. And I think a lot of the reason for that is a significantly higher proportion of Curro schools are in that development phase where you make losses for the first few years. So eyeballing the P multiple for Curro is a bit less useful than it would be for most companies. But having said that, I think it's also important to realize that when you look at Advtech, you're buying it at a forward 18 PE, which incorporates the biggest part of your business. 60% of profits is the schools division running at a margin of 17%, an EBIT margin of 17%. Now, when you look at a mature private school in this country, the best ones will be running at 50% EBITDA margins. And they have a number of examples of schools within their base making 40 to 50% EBITDA margins. But it's because they've started off on this development curve where you've now got probably, we would estimate about a third of their schools base is what we would call immature schools. In other words, they haven't yet reached kind of the right part of the J curve and occupancy levels, and they're probably still making losses. So the profitable part of your business is probably making 25% margins, and then you've got losses in the rest, which brings you down to 17 or 18. So as if they just stopped developing new schools today, you would find that the existing base will probably generate 10% trend turnover growth, if not more, as capacity fills up. And then those margins go from 17 to 20 or 25. So you've already got quite significant profit growth, underlying profit growth in the existing base of assets that you have. But we know that they will invest quite heavily in future capacity. I think the 10-year program they have is something like 4 billion rands worth of capex spend. That number will grow, and it's worthwhile bearing in mind that equates to the market cap of the company now.
Now, this company's come under a lot of criticism because, again, we have to continue mentioning Cure here because they've reached their 2020 target years in advance of 40 schools regarding development here. So does this add to the nervousness regarding the school, or are you still confident
I think a lot of that, from a Cure perspective, part of the reason why they could be a lot more aggressive, and perhaps Advtech should have been more aggressive with approaching their shareholders, is that Cure's got a very friendly shareholder in the form of PSG that's very happy to underwrite rights issues to accelerate the growth beyond that which they would be able to achieve just by the internal cash generation of the business. Because if you look at Cure, they've grown their schools base much faster than they had the cash flows to do so, which is obviously why they've come to the market. So Advtech hasn't done that. I think they obviously have a profitable base of schools and other parts of their business that they can use to fund the growth. And it's worthwhile bearing in mind also that a school, you can inject a lot of debt into a school. So we would estimate that for a typical Crawford, which probably costs 250 or 300 million rand to develop, they can probably fund that 70% with debt, and they've still got the cash flows of the existing business to fund the equity contribution. And on that, you're probably achieving a 25% return on equity by the time that school's mature. So it's fixed capital investment. It's very capital heavy, but the returns on that capital are exceptional relative to other property-related investments. These are great businesses.
Great businesses, and let's get some perspective on it because Advtech's interim chief executive, Frank Thompson, did talk to me about the outlook in the tertiary division of the group. Let's take a look at that interview.
We're really very pleased with the way the tertiary division has delivered on their 2-year turnaround. When we had the enrolment setback 2 years ago on my watch, we said that it would take 2 years to really see the effects of the corrective action and the re-engineering. This has come through very strongly in this period. What's also very exciting in the tertiary space is that the repositioning of the mid-fee and lower-fee parts of the division, principally Rosebank College today, has driven enormous enrolment growth. And for 2015 year-to-date up the end of February, compared to the same date a year ago, the enrolments in the tertiary division are up 21%, which signals clearly a very strong forward-looking outlook for the tertiary division, which is great.
Peter, to come to you, schools, as we heard from Sean, is performing well. Tertiary is where some of the trouble is, but they're trying to work out those particular issues. Is this the kind of company that, like you say, can get your child in from grade 000 to actually getting some kind of tertiary qualification and degree there?
Yeah, we're not particularly concerned about tertiary. It seems to be doing all right. If you look at the new acquisitions that they've done of Centurious Colleges and Maravest, I would guess tertiary would be down to 10% of profits. If you look out of EBITDA, if you look out kind of a year or so. So, it can be a swing factor, but ultimately the tertiary division is not going to be the success or failure. I really like the schooling business, because the secondary schooling, because that's where you've got your customer for 18 years. If you picture in tertiary, there's 1, 2, 3, 4-year courses. I'd guess the average student is a 2-year student. So your sales cycle and your, the annuity revenue element of it is different. When tertiary is doing well, you can probably make a higher margin because you don't need to provide as much with tertiary in terms of swimming pools and school fields and sports coaches and the like. But why we're buying into this company and why we particularly like it is the annuity at a high return in the kind of secondary schooling type equation.
You mentioned some of the metrics a moment ago, Sean, and maybe let's delve into the valuation slightly deeper here that justifies potentially the investment case here.
Yeah, so I think the way we've looked at it is to say that the school's business at capacity, if you're prepared to value it at 13 times EBITDA, 13 or 15 times EBITDA, you take Centurious at kind of market value, and then put low multiples on the tertiary and resourcing business, specifically resourcing, which we don't think is a growth business. You can very quickly get up to 11 rands per share worth of value, and the share price is now sitting at 9. I think it's important to contextualize the growth path of earnings per share. What we're not saying is that we're not necessarily saying you're going to see guaranteed 25% growth in reported earnings out of the schooling business. You didn't see it this last year, but the reason for that was that they're investing heavily in new schools. Now, new schools make a loss initially. So the earnings outlook for this company partially depends, like it does with Cura.
It's a decision.
It's a decision on how quickly they invest. But if you just stopped the pipeline today and you said, let's allow the existing schools to fill up, you would see a very strong growth in earnings coming through from the schooling business. But what we will likely see over time will depend on how they invest. But even if it slows down their profit growth, it doesn't slow down the value creation curve in our mind, because you're creating value in building these new schools because the through the cycle returns are so attractive.
Well, let's get the expert's view now, whether we like to buy, hold or sell this particular stock. Peter, to come to you, I have a funny feeling you like this one. Buy, hold, sell?
Yeah, I think it's the classic kind of business you want to hold in a long-term portfolio. Highly predictable levels of earnings. The valuation isn't cheap. It probably never will be. High quality business. They've got the great brands. It's something I'd very happily put in a 10-year portfolio and probably not even look at it again.
Sean, you agree?
Yeah, I would certainly agree. So it's a buy for me.
What about the movements across the outside of the South African sphere? Is that also something that might work in favor of this particular company?
In terms of them expanding offshore?
Yep.
I think that they've probably got enough opportunities on their plate at home to deal with before they get there, would be my sense. I mean,
I think you'll see big things into Africa over the course of the next few years.
And Advtech's more likely best positioned to be able to tackle that versus Cura.
Yeah, I think Cura's model is well, I guess in places it could work. It depends what kind of opportunities. But I think both the education groups would be eyeing further north, where I think there's, ultimately there's people who are prepared to spend money on education. And where that exists, you can create a model that creates a return. You'd have to tweak it a bit differently for every country, but I think there's a big opportunity.
To close off with, you're not concerned about the leadership challenges there? It was Frank Thompson, then Leslie Masperdorp, and now Frank Thompson in the interim, and someone else might come through in the next couple of months?
And we were very concerned, and it's not ideal. But effectively, at school level, nothing changes. I think it's a big enough company to attract a great person to come and lead it. It might come from within, might come from one of the acquisitions they've made. Frank Thompson was at the helm for a long time. He understands the business probably better than Leslie Masperdorp did. So very comfortable with him being the interim leader. But I think you've got to back the board to come up with the right person to take the vision forward.
Well, we'll leave it there for today. It's a buy quite clearly for Advtech. That's where we leave it for today here on Talking Stocks. Be sure to join us again next time.